back streaming now. Let's stay in line. Hey folks, sorry about the issues with Ustream is having trouble with their server shutting down, so it looks like we're back up and running. And just to confirm, Mitch, you're hearing me fine?
Yes.
Okay, good. Sorry folks, technology, right? 2014, what can you say? Not sure what happened there. Hopefully some of you have continued to hang on there and get through this glitch. What I want to do is we're going to go over and let's talk about the stock of the day, and I think that will be helpful from the standpoint of going through some items here that are occurring. We've got a list of stocks, so I'm going to go through. Well, actually, before I do that, you know what? Just this whole glitch has thrown me off to a point. I was going through the Dow. What I'd like to do before we move on here, let's just look at a couple things here real quick that I wanted to be able to point out. And one of those was going through those long-term trends that I wanted to show you, and then we'll move on and we'll have a few minutes to go on, and because I think this is important that I want you to understand. The chart that we're looking at right now, I'm going to format the symbol, and it only goes back 20 years right now, so we're going to go back 50 years real quick, and just so we can see some longer term data. And you'll be able to see a lot of the scenarios. Now we're back here, the chart as I move it in the middle, that is the 2000 rollover, and the same characteristics that we have right now are continuing, where we've got the broadening view of the moving averages spread out. We've got a flat period of PPMs, and ultimately it rolls over. Of course, this was the big rollover here, about 38% or so from 2000. So let's go back and look at a couple other declines here. And you'll see even in the 87 crash is right in the middle of the screen right here. The PPMs had peaked out as always. The death pattern was unfolding from the number of stocks participating. In 1987, I wrote a newsletter called the WaveTech Analyst, and the WaveTech Analyst was talking. What I was talking about at that time is that the risk-reward ratio coming into September of '87 of owning U.S. stocks was 0. You should not own any U.S. stocks. Of course, we had a 40% decline in 3 days, not 1 year or 12 months or 14 months. 3 days we saw a 40% decline. And the same modeling process, basically, it was being done manually in those days, was triggering lots of sells. So not only were we selling, but we were actually short. I had a pretty brand new 930 Porsche I bought. I called my crash mobile because I bought it from monies that I made in the 87 crash. So I was very lucky at that time, but these patterns continue to unfold. So we can go back, let's see here if there's, we should be able to go over to possibly, it's really difficult to see. I'm going to try to highlight this area right here. It's not going to work out. It's not showing me the dynamics we need to see in this trend. But the bottom line is we saw same thing in a little mini, what I call 1991 crash. And then if we go back and as we come into the dot-com in 1998, here's one of the other patterns I want to show you. 1998, it felt pretty drastic over here. Let me draw a couple arrows and then we'll move on to the stock of the day. But I think it's important to see this because this was the 1998 decline. That was a small cap collapse of stocks, and we went from the small caps into, of course, the 99 and 2000 .com IPO mania that we went through at that time. And if you look at it from an index standpoint, it wasn't as dramatic as it felt from here. If we went to the NASDAQ, brought the NASDAQ, then we could actually feature that idea a little better. So let's go ahead and do that. Hey, Mitch, if you wouldn't mind, if you would Skype me out and just see how many folks we have online right now, would be great. The one of the things that I think is interesting from looking at some of these stocks, we're going to go to the stock of the day now, and we're going to bring in, let's see, ANZ first. If I can get it right. Must have the wrong symbol. AZN maybe. We got a monthly graph here. Let's go to weekly. We got a huge gap going on in this stock. PPM's just accelerating. Typically what will happen is, and I'm not sure if there's news out on this as well, so maybe there was a buyout or something going on in this stock. Looking at it from a pure technical standpoint, we're seeing a consolidation. So oftentimes if there is a buyout, you're going to see the stock actually increase there, and that will be I guess a consolidation phase and start to just build up, even if there's a pricing situation. So I'm going to ask Mitch just live on the broadcast if he find out if there is any news on his stock. From a standpoint of the technicals, they're expanding. Typically these gaps will be filled, so there could be some backfilling, and it looks like we've owned this stock for a while. So there's a couple of things to look at. I don't know if the let's bring it up in 2.0 real quick. Here we go. And let's go ahead and take a look. Yeah, so let's see if I can make this a touch bigger. If we got AZN coming up right now, and just while this is coming up, when I use the term backfilling, what I'm talking about is the market going back in and filling a gap or retracing a previous move. So let's say the market moves up and it's backfilling, it's actually coming back and trading back into the range, because typically you're going to see those type of things happen when the market goes up and then it pulls back, and depending on the wave sequence it's at. I'm trying to get the chart to come up here. There we go. So you can see the surge. We now have a 53% gain on this stock, and it still looks good from a standpoint of a moving average. And maybe this is the top. If we go in and look at the trade profile, try to look at what the statistics were telling us about this stock. So yeah, it looks like it's exceeded all of the previous expectations. So this tells me that we're setting new history here, but the trends are still up. And like I said, so there is a buyout that Pfizer's buying out this company. So from that standpoint, if that's the case, I'm sorry, we're trying to find this out as we came in on the fly here. So with Pfizer buying this stock out, I would look at the buyout price, and if we've reached that, I'd go ahead and take profits, just turn this stock off, go out and sell it, and move on. It's a great trade, as it turns out. So I thought there might be something going on like a buyout. So that's good. Anyway, so let's move on. Let's go back to our other chart. Let's take a look at Bank of America. Now they had a lot of fun today. You can see we've got the weekly chart up here. We actually sold out of this stock a couple of weeks ago. It's down today 5.46%. I was actually bragging about Bank of America / Merrill Lynch. I'm an ex-Merrill Lynch guy, and they're doing an incredible job of rebuilding that brand from the Merrill Lynch standpoint, and it's really it's pretty spectacular, some of the things they have going on just on the Merrill side, and I think they're doing a great job, but they definitely screwed up this by canceling the buyout and some of the other elements here. They're triggering some risk in the stock at the moment, but a great trend. I want you to look at, we bought this at $9.39 way back on 9/21 of 12. So we're looking at a year and a half trend. We just took profits. This is actually a really good example. This is a good example of what I was talking about on what we're doing with a lot of these stocks. There's stocks that we have sold out of in the last 2 or 3 weeks. As you see this percent bullish come back, what's happening is that we're taking a lot of profits on these stocks, and this is a classic example. So, you know, a great trade from $9 to looks like about $15.50 or so, I'm guessing, and pull it up exactly. But these are the kind of things that we're seeing across the board. And there's some other stocks that maybe we bought and they haven't worked out well, but there's a lot of long-term profits being taken. So we've got a lot of really big tax efficiency that's coming out of a lot of the trades that we're selling out of as well now. So this is the best of all worlds. When you get a move like we saw in 2013, and some of these stocks, and even though the market's been very choppy and we can't go anywhere from an indice standpoint, a lot of these stocks continue to move up in spite of the indexes. And I think way too much time is spent talking about what's going on with the indexes versus what's happening with these individual stocks and different segments of the markets. And sometimes maybe large cap, and it's just like I talked about earlier, we've got this huge pressure coming in on the NASDAQ, but it's not evident in the Dow Jones or in the S&P. There's just some NASDAQ components that are under big pressure right now. Whether that becomes contagious and causes other things to happen, that's yet to be seen. So let's go and let's take a look at GE now. The GE's had a pretty good bounce. We had what looked to be a good trade going. It's come all the way back, and we're hovering, and we are trading along these trend lines over here. You can see where my cursor is. Underneath those moving averages continue to be a support line, but there's really not the type of trend that you want to be involved in here, and there appears to be some risk. Now, one of the things that are starting to come, there's a lot of elements that are coming back into the market right now, such as M&A and other types. The Pfizer deal is a good example, and there's other acquisitions and companies that are starting to consolidate a little bit, and the buybacks as well, like Apple and the split the other day. Pretty significant from the standpoint of what's going on with those individual stocks, and those type of activities, corporate actions, are going to drive the markets higher, if you will. As far as GE goes, not a lot there. We looked at Bank of America. Let's go ahead and take a quick glimpse after. I think we looked at Apple after or before the move, and you can see on this level, we've seen Apple start to push out of this range a bit. We're up at the upper end of the range of what's going on. We are seeing accelerations in the trend. Whether this will continue and this chart goes up, as you know, Apple was a bellwether when market was rallying there last year. Was really one of the things that helped to keep a good bid in the market. It's widely held across the street, and within VPM users, it's also widely held. So we have just a few more minutes to go. I want to go through and apologize first for the technology glitches we had today. I'm not sure what that's about. I was getting errors from Ustream, not from any of the software here that we use to do the broadcast. So evidently, maybe they had an overload with their streams. They're becoming very popular, and I can't imagine the bandwidth it takes to push this stuff out on the street. So in our final closing minutes here, I just want to go in and discuss a little bit about what we're continuing to do. Today was kind of frustrating from my viewpoint. I'm sure from folks that were trying to watch with the technology shutting down. But we'll continue to do these. This is the first time we had any issues in the 6 prior shows, so I guess that's going to happen in this world. But I'm excited about Wednesday's meetings, and specifically on the process warriors. And one of the things we talk about, process over attitude and opinion. The first thing that we're going to do is talk about what process is. So if you don't have time to be there at 3 o'clock Central Time, that'll be lunchtime here in the West Coast. If you don't have time to do that, it'll be available publicly. And I suspect today's broadcast is going to be in multiple parts because we started the stream and left. So we'll have probably several little pieces that we'll show you today. But in closing, once again, thanks a lot we've had a lot of nice comments about this. I'm really trying to get this show with some better energy and moving through. But I think after setting up this week was pretty significant, because I believe we're going to see a continuation of the I guess continuation of this sideways range, but the volatility I think will expand by we get to the end of the week. So thanks again. We'll talk to you on Wednesday morning. Look forward to it. Have a great day.
None of VPN Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPN Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPN Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPN Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.